Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. Welcome back to the show, John.
Jim, glad to be back.
John, you last talked about Tri-Origin Exploration and its South Abitibi project in March a year ago. Last week, the stock had a burst of volume after announcing that Sumitomo had given back part of the South Abitibi Alliance. Where does the South Abitibi project stand right now?
Readers may, or listeners may recall that the South Abitibi project was generated by Bob Valiant based on the idea that in this so-called Cobalt tomogamy area, where there are Proterozoic sediments that cover most of it, the Abitibi greenstone belt nevertheless projects underneath it. And he put together two land packages, one sort of running east-west in the northern part, and one running north-south in the southeastern part of this area. And Sumitomo was attracted by the idea that there could be very big, rich gold deposits or VMS base metal deposits, possibly gold enriched, lurking underneath this cover rock. Now, this area had also been off limits to staking because of a moratorium related to native issues, and that got lifted some time ago. So there was almost like a 25-year period where nothing was done. The deal was struck with Sumitomo in 2015, and initially they focused on the northern target area, and they drilled 7 or so holes in late 2016. They did not get any significant gold intersections. They did get proof of concept, yes. There is mineralized Abitibi greenstone belt underneath these cover rocks, and in this area there tends to be more overburden and cover rocks, but because they didn't get the discovery on this first try, they decided to switch their focus in 2017 to target B area, the southern group, where about half of the land has Archean rocks exposed, and we know that it's there, so you didn't need the proof of concept that you needed in the northern part. So they spent all of last year conducting geophysical surveys, and they have yet to really report what that is all about. Bob Valiant of Tri-Origin is waiting for Sumitomo to let them know if they plan to proceed in 2018 with a $1 million plus drill program, which is going to be a high stakes program because we're dealing with geophysical targets under cover rock that have never been tested before. So it could generate a discovery. But, you know, every time I hear about a Japanese or Korean partner of a resource junior, I can't help having that Chicago song pop into my head about slow motion riders. It's been waiting such a long time. It's just a horror show, and the stock has suffered as a consequence. Its balance sheet is weak. It has a small position of Heron Resources stock left over from the Woodlawn spin-out, this Australian project that they had in a prior decade. And it's also the balance sheet doesn't look particularly good when you have a $300,000 personal loan from the CEO on the books. It gets rolled over each year, but because it's always just a one-year loan, it's always there as a current liability. So the stock has languished below 5 cents, even though the company has a number of interesting projects that it would like to drill. Now, they did attract a financing in sort of mid-February. It was a $500,000 financing at 3.5 cents. Unfortunately, it also came with a full 5-year warrant. And that's kind of crazy because the market immediately says, wow, these people, they're going to, as soon as it's free trading, they're going to dump their cheap stock and then just sit on the cheap full warrant for the next 5 years as a big sort of monkey on the stock's back. It's that sort of Jabba the Hutt philosophy that was pushed during the pit of the bear market that began in 2011, and it's usually seen as a sign of weakness. Well, that financing got canceled. About a couple of weeks ago, it's been replaced by a new one. It's cheaper. It's at 3 cents. It's for $700,000, but it's a combination of flow-through and common. And the flow-through is going to a group of Canadian, long-term Canadian backers, and the non-flow-through is going to a group of American backers, and both groups seem to be focused on the gold potential. They're not that interested in what Sumitomo and Tri-Origin may come up in within the South Abitibi. Their focus is on projects such as Detour West, the North Abitibi, and Sky Lake. And of these, the North Abitibi is the one that's going to be targeted first for drilling this year once the money is in. This is the sort of western extension of the Casa Berardi gold belt, and then they would probably proceed, if they can raise more money, proceed to the Sky Lake project, where Tri-Origin originally had claims that surrounded a historic resource that Barrick owns, that it inherited from its takeover of, I believe it was one of the predecessors of Lac Minerals or so. In fact, Bob Valiant was associated with this project. Anyways, in late 2016, he managed to strike a deal with Barrick to get 96% of this project. But if they ever do find anything significant there, Barrick gets the back in for 51% of that whole project. It's a high-grade system west of the Pickle Lake system. So we have potentially 2 drill programs on gold projects coming in 2018, if assuming this financing closes. But that doesn't really explain why the flurry of activity last week. The news release was a bit convoluted. In essence, it said that Sumitomo had dropped a part of the Sumitomo alliance, and that turns out to be Target A. They've decided they're just going to focus on the Target B area, where we hopefully get a news release later this year. But in this area, what it had was it has the sort of those Cobalt district sediments that host these high-grade silver cobalt veins that made the Cobalt mining district over 100 years ago. Sumitomo wasn't interested in the showings that are on the property. This is, younger mineralization, not the deeper, older in the basement rocks. So all the company did was rename the Target A portion of the South Abitibi Alliance as the Bay Lake Project, pointed out the high-grade cobalt potential, the fact that there are showings on there, and the news release seemed to trigger a whole bunch of selling below 3.5 cents, which was quickly picked up by an awful lot of buying, presumably by people who understand that the cobalt story keeps getting more interesting. We, of course, have talked on this show about the electric vehicle mania, big projections for 2025 for electric vehicle growth, and the big problem, assuming the lithium-ion battery with its cobalt requirement remains the primary battery, there are looming shortages coming. So the interest in various alternative sources to Congo has risen, and the Cobalt district has potential. It's going to take a lot of work to piece together these high-grade vein systems that have silver with a cobalt byproduct, and maybe the cobalt will end up being worth more than the silver credit. But it got a boost last week when the Congo government told all the miners in the company that this new mining tax regime that their parliament had passed, which Kabila had signed into law, was in fact law. It means the new taxes apply to everybody, and that was kind of to be expected. Stocks like Ivanhoe Mines took a hit. Katanga, in fact, didn't really take a hit at all, even though it is the largest producer in the country. But one of the things that's included is that the government now, if it chooses to declare cobalt a critical metal or strategic metal, it can boost the current 2% royalty to 10%. And it's almost guaranteed that they will do so, because the cobalt is a byproduct from Katanga's operations, and so charging an extra 10%, that's a way for the government to collect tax revenues without having to deal with accountants making all the profits vanish and not have much taxable income available. But it also has implications for the 1/5 of Congo's output, which is about 65% of global output, that comes from artisanal mining operations. And these have become very controversial because they often involve child labor. They have these warlords supervising them, so the people who are doing the actual mining aren't making a huge amount of money. It basically gets smuggled out of the country, doesn't get taxed, and it's been a problem for groups like Apple with its iPhone. It's supposed to be a nice, clean product, but these concentrates get smuggled out of Congo. They end up in China. They get smelted into cobalt. And then all these iPhones are built in China anyways. They end up getting their cobalt, and there's no way of verifying whether this is clean cobalt that came from a legitimate operation where there were no human rights abuses, or whether in fact it was dirty conflict type of cobalt, similar to the problem that the diamonds that came from the alluvial operations in Sierra Leone acquired a couple of decades ago. Now, a new solution that's being proposed, and in fact the Financial Times has an article about it, is different groups are coming up with a blockchain ledger concept to allow the artisanally produced cobalt to enter the supply chain and be audited as part of this process, so that whoever ends up getting the smelted output can say our supply chain is clean. We aren't getting our cobalt from these dirty sources, so you can't launch your negative public relations campaigns against it. One of the outfits is RCS. It's a UK-based company that specializes in auditing supply chains. And another one, a little junior company, it's called Peat Resources. It was involved in peat mining or exploration, which is about as unglamorous as you can possibly get in the whole mineral spectrum. It's actually almost a fossil byproduct. But they have done a deal with a group whereby they will also develop a blockchain ledger. And last week they changed their name to Cobalt Blockchain, and they're basically harvesting two of the top manias of late. One is, of course, the blockchain mania. Anything to do with blockchain is absolutely wonderful. And the other is the cobalt mania, and this idea of being able to bring blockchain to bear to get the cobalt that comes from these small-scale operations into the supply chain. It makes a lot of sense. But the cynics, of course, are saying, well, all you're really creating is a structure whereby the thugs and warlords and all that can launder their dirty cobalt and make it seem like it's clean. It's you're still not going to be able to verify that this cobalt didn't come out of the ground under very bad conditions. So this company, Cobalt Blockchain, has now said we also need to move into this part of the world and get concessions in this area and organize these artisanal operations ourselves so that we can, vouch that we are not simply getting dirty cobalt and laundering it through our blockchain system. And of course, that's going to be interesting to see how Western companies moving into this part of Congo where the warlords do run these operations, how successful they're going to be at that. But this is all good news for projects such as the Cobalt Temagami projects in the Cobalt Temagami district, which are a reasonably safe jurisdiction, and of course any of this conflict cobalt coming out of the Congo. In order for it to be clean, the government will have to see it, which means that 10% royalty that they want to charge, they will be able to collect that from that fifth of its output for which it collects absolutely nothing. So in essence, this news coming out of Congo potentially raises the price that the big users are going to have to pay for cobalt, and that means that whenever the little bubble in cobalt hits its limit and starts declining, it's not going to go back to that $10, $12 a pound level where it was before it took off. So this gives all these explorers extra incentive to look in these regions where they can produce clean cobalt in clean terms and in a geopolitically stable jurisdiction.
Discovery Watch with John Kaiser will be right back after the break.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're speaking with John Kaiser. John, Mineral Mountain Resources has been in an uptrend since it began drilling in mid-February at its Rochford project in South Dakota. Given the overall weakness in the junior resource sector, what is driving the stock price?
The market thinks that we may finally have a bona fide discovery on our hands. Just as some background, the Rochford district sits about 25 kilometers south of the Homestake mine, from which over 40 million ounces of 10 to 12 gram per ton, 8 to 12 gram per ton, were produced over the past 100 years. It's been closed down. It's now a government research laboratory where they look for small particles way at the bottom of the mine. But this area to the south, it has a fragmented ownership history. It has the same sort of double-folded banded iron formation systems. There is evidence of gold mineralization in the old Standby and Cochrane mines. These were shallow mines that chased, pretty good medium-grade Homestake-style mineralization, but then it seemed to fizzle out. Past operators, including Homestake itself, have drilled holes. They would option one of these claims and then drill a deep hole, and they'd nip something. But because nobody could ever consolidate this land position, nothing substantial was ever found. And that's where Mineral Mountain came in a few years ago and managed to assemble most of this district and has attempted to raise what their target of $5 million, which they think this is what we need to start tracking the downplunge extensions of former mines such as Standby, and demonstrate that there are ledges similar to number 9, which was sort of an 8-9 million ounce deposit within the whole Homestake system, that these are present in the Rochford district, and indeed these would be underground mines. And if you demonstrated something like that, that would be a very exciting development. And I adopted them as a bottom fish a year ago after talking to Bros Brodowski at the PDAC conference and getting my head around why they think they have figured this all out. And the company kind of disappointed everybody because they did not get more than $1 million in that period. They got that from a group of Asian investors who bought at 27.5 cents, and their financing, their warrants just came up due for an escalation last week. So apparently some of them have been choosing to exercise these at 40 cents rather than let them go to 50 cents in the second year. But the company missed the window to do a deal with one of these big majors, these big producers, such as Agnico Eagle or Goldcorp. They have been doing these 19.9% financings with juniors that have district scale projects. But by the end of June, Mineral Mountain hadn't pulled it off. They had slumped, and of course the summer was a bit of a funding drought. However, in October, they bit the bullet. They did a big financing at 20 cents. It didn't quite raise the $5 million that they wanted, but it gave them enough cash to get this going. And what helped them get this done, and it was spread largely amongst retail investors, none of these big institutional types or any of these majors, was they had managed to track down a hole Getty Oil drilled in 1982, which was about 17 meters down plunge from the deepest level that the standby mine had been developed. And there were no assay sheets available saying what this assayed, but the split half core was still available. Management was able to retrieve it and examine it, and it's the right homestay style mineralization, and it even has visible gold in places, which is only in the richest part of the system that you see the gold as a visible native gold. But what they decided to do is we're going to first twin this hole to confirm the location of it and find out what the grades actually were. The obvious question is, why didn't Getty Oil continue to pursue this way back then? Well, that was that period when all these oil companies had charged into the mining sectors because they were doing so well in oil. And then, of course, Volcker decided to deal with high inflation by jamming the interest rates to nearly 20%, which created a recession and also put a damper on the oil price. So all these oil companies gave up searching for gold in that, and something like this could simply have been unfinished business that got lost in the data faults. So they started drilling at PDAC this year. They had some core sample from it showing, yes, at least the location is right. We have intersected this hole where it's supposed to be, and that may have got the stock going, but you would think, okay, so you twin some random hole and show, yeah, this was a really good hole. How does this hang together with anything else? Well, one of the rumblings at PDAC that I picked up was that the second hole was spotted to intersect the projected plunge of this zone, another 17 meters down plunge, and had intersected similar zones of mineralization. And of course, we don't know what the grade's going to be at this point. But because they were seeing this where it was supposed to be, this was giving credibility to their geophysical modeling of the shape of these zones that they are chasing. And they've modeled, they've done extensive geophysics over the whole thing, which was never done by anybody before. And they've got 3 significant targets that they say are very similar in scale to the number 9 ledge from the Homestake deposit. And this one, so we're now seeing, okay, the interpretation's good. They're following it down plunge. So this is probably just, 200, 300 meters, down plunge or down from the surface. This particular program will track it to about 400 meters depth. The whole thing potentially goes 1,500 meters down plunge because, Homestake ages ago, and I think it was in 1986, drilled a very deep hole that nipped a short interval of mineralization. But because this hole has no context surrounding it, they didn't follow up, and because it was the land ownership was in such a mess, it probably wasn't worth spending a lot of money to try and piece this all together. But now the tantalizing thing that's attracting the market is, hey, maybe this is something like at Arizona Mining Inc., where there was this hole that ASARCO drilled way to the west of the Hermosa-Taylor project boundaries and very deep, hit something and never did anything about it. And then as they start tracing the old central zone down plunge, they have established an enormous 100 million ton plus very high grade system. So the market's thinking something similar may be unfolding here. If we get good gold grades, confirming that the gold is there and the structure is understood and we just need to track it down, we have a discovery delineation play unfolding. And of course we won't know until we get assays. The stock has run up ahead of assays on optimism. It's a bit weak today because people are wondering, well, why haven't we seen any assays yet? So we'll wait to see what the assays are, if they confirm Homestake style grades and that this model that they're chasing is in fact reality at the Rochford project.
We'll have closing comments from John Kaiser when Discovery Watch returns.
Hi, I'm Douglas Mason. President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Abin Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Abin's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abinresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with John Kaiser. John, last December, you talked about the Australian counter-invasion of Nevada, where over 300 million ounces have been found, which may only be half of Nevada's potential gold endowment. The Australian gold producer Ramelius Resources was drilling the Jupiter project option from Renaissance Gold. How did that whole program turn out?
Well, they reported that the results of this 6-7 hole program not too long ago. The Jupiter project is in eastern Nevada. It's not clear whether it's a Carlin type system or an epithermal system. It appears to be younger, so it wouldn't be the classic Carlin type system that formed between 42 to 25 million years ago when the Farallon subduction slab rolled back across northern Nevada and unleashed all these ponded brines that came up and formed these fabulous deposits. The holes did intersect mineralization, and Ramelius, which is a sort of an underground miner, a producer already in Australia, is expected to go back to Jupiter in mid-July or so and drill some more holes to try and tease out where the enriched structures are that may be related to the mineralization they did intersect. But the part of the Australian invasion of Nevada that I think is going to take front center, especially for Renaissance Gold, is the two other projects that are scheduled for drilling. The first is South Roberts, and the second is Acru. Now, both these projects, along with Jupiter, came into Renaissance Gold in the middle of last year when Bob Felder's Kinetic Gold Corp got absorbed for about 7 million shares. It had been a private company. Felder had managed to negotiate this deal with S2 Resources prior to the merger announcement. So Renaissance Gold basically ended up inheriting two important deals. The S2 Resources deal is very interesting because S2 is focused on finding elephants. If you look at their presentation, they are quite clear that they are in Nevada to find gold rush style elephants. This is that 15 million plus ounce deposit to the east of Cortez Hills that Barrick is doing feasibility study work on. What makes S2 Resources especially interesting, and why I call it kind of the Australian counter-invasion, is that S2 Resources has about 250 million shares issued, 300 million fully diluted, which is, not as horrible as Australian companies can be when they get up to into the billions of shares issued. But the largest shareholder is an entity called Yandal, which happens to be Mark Creasy's holding company. So Mark Creasy, who was the source of the Beaton's Creek project for Novo, and who has other companies in the North Pilbara area where Quentin Henney is now focused, he's decided, okay, we're going to move into this jurisdiction, where last week we talked about NV Gold and Quentin Henney's ATV project, where he's also doing this high risk high reward drilling through fair thickness of unprospective rocks to get at what hopefully are big, rich Carlin-type deposits. Well, S2 Resources is doing this also. Its deal with Rengold, or Renaissance Gold, is to earn 70% by spending US $3 million over a number of years. In the case of South Roberts, this project was actually, it's south of the Gold Bar project, which McEwen Mining is putting into production. McEwen Mining had optioned the South Roberts property, and the technique that Kinetic Gold had used to generate targets is something called enzyme leach, which involves looking at the manganese, iron rocks at the surface, to which have absorbed gaseous compounds carrying elements that have somehow been leached away from deposits at depth. So it's a form of remote sensing, different from, say, the hydrogeochemistry that Nevada Exploration Inc. is doing in this area. Very similar to what Eurovan has been doing in the Athabasca Basin, looking for the lead isotope, radiogenic lead isotope ratios by assaying or assessing the clays at surface. Similar type of transport story. What this data set generated was what they call a rabbit ear anomaly. The theory is that we have an anticline, basically the lower plate and upper plate rocks folded, and the weakest part of the anomaly was smack in the middle, which would be the axis of the anticline. And the McEwen Mining geologist said, well, we prefer to drill the gold highs in this anomaly. So they drilled the two targets on the flanks, and they got some smoke in the upper plates. Did confirm that lower plate is present, but didn't really drill that hole in the donut. So S2 Resources is going to go in there in mid-April and punch some holes smack down into this target. Now this area, when McEwen Mining retained Nevada Exploration Inc. About 6-7 years ago to do a large regional groundwater survey, this area was included in this, and Bob Felder tells me that the data that came from that was not particularly promising. So if you believe in the hydrogeochemistry approach to identifying elephants hidden under gravel, it's certainly not pointing this out as a super target. So if they do get something, not sure what it means for the groundwater model, but it will certainly be supportive for the enzyme leach strategy, which, by the way, can't really be used as a regional reconnaissance strategy. It has to be done in conjunction with a target area that you generate through, all kinds of other reasons, and then you go in there and add it as one more layer of information, increasing the prospectivity of the target. But what's going to be much more interesting than South Roberts is the Écru project, which is just north of the Robertson project that Barrick last year acquired from Coral Gold. And the Robertson project had been in Coral Gold for decades, and it had been farmed out to Placer and then Barrick, and all the focus has always been on the shallow mineralization, the oxide mineralization, potentially open pitable, and it was always a frustration for the late Lou Wolfen that no serious deep drilling was ever done to see if there's a high-grade Carlin-type gold system in the lower plate rocks, presumably underneath this lower-grade mineralization near surface. Well, now Barrick paid $14 million US for this project, left Coral Gold with a 2% royalty, and apparently is going to go in there to drill some deep holes this year, probing for much richer deposit beneath this lower-grade stuff that's always been known about for the past couple decades. And what's interesting is there's an inferred Cortez Hills structure that runs through the Cortez Hills deposit, past the pipeline deposit, through this area. And whether it is relevant to the existence of this high-grade mineralization at Cortez Hills, we don't really know. but S2 Resources likes this écru target, and in fact it used to be part of the Robertson package, but a few years ago, for some reason, Coral Gold decided to let those claims lapse, and Bob Felder's team, which keeps track of all these interesting properties, immediately snagged them when they became available. So there are going to be several deep 1,000-meter holes drilled into this, similar type of strategy that's now being pursued at ATV. There isn't any special reason to be excited about it in terms of what's available to see at the surface, but it represents a sort of a big picture approach to Nevada's undercover, under gravel potential based on geological reconstructions about what may be going on at depth. And S2 Resources, after selling its Polar Bear nickel project in Australia for $9 million, it has $25 million in the treasury. It has another project optioned from Renaissance Gold, and it looks like this company is serious about Nevada. Its other focus is in the central Lapland belt of Finland, where we have talked about another Discovery Watch Junior, Orion Resources, and its Risti project. Most of its valuation is more on the Finland potential. So S2 Resources itself is a free ride with Mark Creasy, who is a big mine finder. S2 Resources is a spin-out from Sirius Resources, which made a major nickel discovery that got bought out for $1 billion. So we'll see how this Australian invasion proceeds this year with these two projects, South Roberts and then écru. See if we get some deep, good undercover discoveries.
John, thanks for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Godwin.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.